All right, welcome back to another Stock Talk live stream. Um, I'm your host, Jesse, and we got Bacon as usual with us. How's it going, man?
We all do our best. We do our
Yeah,
best here.
yeah, yeah. We struggle. We somehow make it some days, but
Yep.
do our best. How you been doing? How was the long weekend for you?
Oh, I worked like 2 of the 3 days,
Oh,
and yeah, and
so
just
not
tried to
very long.
just tried to get situated with my classes that had just started up not that long ago. So it'll be fun times, quote unquote, but
Nice,
important times though, important for sure.
fun but important. Yeah,
Yeah,
yeah.
yeah,
So, well, I guess the news this week is the ARM IPO.
yeah.
They apparently are going and trying to pitch themselves and convince people to spend a lot of money on not even like I think they're only doing an offering of like 10%. Is it
Yeah,
even
that's
that
what I
8%?
heard. Yeah, and
It's
I'm
like
still unsure what you're getting.
so from what I saw in my brokerage, because the IPO offering statement became available today to sign up
Hmm.
for, and I think the offering amount was like 9.5 million shares, and was that right? Yeah, and total, gosh, was that no? Because total, don't they have like a billion shares total? I must be wrong.
I don't even know because the document that we're going to be citing a lot, like it has blank spots for percentage ownership for the company that is doing the IPOing, being SoftBank. So
Oh
it's
man, it's.
yeah,
I mean,
I don't
they
even know
definitely
anymore.
they
Oh,
definitely gave, yeah, 1,000,000,000, 1,027,000,000
yeah,
weighted average ordinary shares outstanding, and they're offering up like maybe it was 90,000,000. It was probably 90,000,000. I think it's like
yeah,
I think they're offering up like 5 or 10% of the company,
yeah.
in this initial offering. So, you know what, we can actually Google that. Google is a good thing to
Hmm.
use for that. Um,
While you're
Yo,
googling, I will
share.
reference the comments section. Yeah, if you wanted to, you could reach out to your brokerage. Some might call them Fiddly and Schwab. There you go. Go nuts, chat.
Yep. So it's 95.5 million
Yep.
out of the 1,027,000,000 floats. It's right around like what, like 8%, 9%, 10%.
Yeah. Drop in the
And
bucket.
yeah, this is what I saw as well, was the target range was 47 to 51 a share.
Yep.
So I actually hadn't really looked at ARM at all, honestly. And then somebody asked me about it, and I was like, it's like, oh, I don't mess with IPOs. I'm not even gonna look at it. And then I happened to find their F1 filing on on Edgar, and I was like, oh, well, let's just take a look at this thing. And it actually it actually kind of sent me down a rabbit hole. Looking
Yep.
at the business, but then also looking at just I participating, like how to participate in IPOs and whatnot, what
Hmm.
I would have to do in my broker. Um, and dude, the thing that like, let me try to find it here. The thing that just threw me off, sent me down a rabbit hole, is when I got to some of their financial statements and I saw their gross margins, and I was
Yeah.
like, what in the world? And it makes perfect sense now
Oh
that
yeah.
I've like looked into the business a little bit more, but like,
Hmm.
um, it was like 96% gross margins.
Oh
I was
yeah.
like, oh dear God. So gross
It's
profit margins of 96%.
uh,
Um,
it's a great business model.
yeah, yeah,
Yep. Yep.
great.
Hmm.
Um, so that's basically because all their profit comes from licensing and royalties.
Yeah.
So they basically create, or they own the ARM architecture
Yep.
framework, and then they'll IP or license out that framework for others to use, and people that have been using it have been like NVIDIA. I think AMD is starting to build off of it, Microsoft, Google, Apple. Apple's new chipsets are all ARM based. So yeah, it's getting a lot of traction, and the more chipsets that are being built for kind of these things that are focused kind of on power efficiency, which you could think like servers and data centers and things like that. That's where these ARM processors and that ARM architecture is kind of really going to probably come in play. Because assuming all things considered, assuming you have the same like compute performance, if ARM uses like 30% less power than x86, then yeah, and you're extrapolating that out over a huge DC AI environment, it's gonna make a big difference over time. So yeah, it's pretty interesting. I didn't give a lot of thought to it until recently, and kind of just went on a rabbit hole. So yeah, I know you've been looking at it too. What are your overall impressions, thoughts?
Well, a lot. I mean, you already hit on the topic of IPOs. Like, generally speaking, like, why do companies even IPO? It's a chance for the early investors to, either liquidate or see what's out there, and or basically capital raise. Like, almost 9 times out of 10.
Yep.
And does that mean that it's a good deal for you, the investor? Maybe, probably not. Usually, realistically, but yeah, I mean, you hit upon this though. Like, it's great numbers, phenomenal gross profit margin. If we're talking like chips, even some of the vague talking heads and the more nuanced experts that you and I particularly know,
Yeah.
they reference that, like, they anticipate that ARM chips will take market share, especially over time, relative to x86 in so many spaces. So, you have a winning business model, you have a winning product. What's there not to like? And that's what this live stream's all about: is the good and
Yeah.
the bad.
Is this true,
I
Bacon?
I do not. I
Are you
definitely do
secretly
not.
an arm holder and you're gonna
No.
dump it on everybody?
No, I'm too poor to have anything significant with SoftBank and Massive Soft.
But speaking of, do you remember the page where the 180-day hold requirement was? Because speaking of insiders dumping shares, which page was that? Do you remember?
Oh shoot, I
Or
can't remember. I want to say it was the 200 something. Yeah, I'm being bad.
this thing is so actually, you know what I can do?
It was
Uh-huh,
like
180
under the lockup.
day. Boom, look at that. All right.
Yeah, there we go.
180 days.
Yeah, look at that. I remembered it was in the
Will
200s.
not offer, pledge, sell, contract to sell. So it looks like there's a 180 day or a 6 month
Yep.
lockup period for most of the insiders.
Yep.
So that'll be interesting. You hit that 180 days, and then that liquidity event hits in. And I don't even know if this is for all insiders. I'm not sure if you dug more into this or not, but yeah, it looks like there's some type of lockup period for certain insiders for that 180-day period.
And I think we mentioned this, or you mentioned this to me earlier on. Was generally speaking, with IPOs, if, your brokerage has its own rules, where if you're YOLOing in or rushing in to on IPO day, you're stuck with it for, was it 15-ish days or something like that?
Yeah, so
Check with
I
your
did some
brokerage.
research. It depends on the broker.
Yeah.
I'm sure some brokers don't even care.
Mhm.
The broker that I'm with, it looks like they have a soft requirement where if you sell out of your IPO shares within 15 days of it opening, they can basically like ban you from participating in IPOs with them in the future. So not like if you're, especially if an IPO comes available that you actually really want to participate in, but
Yeah.
then you got like banned because you're doing something stupid with another company, like probably not worth it. So something to consider if you're looking at doing any type of IPO participation, and actually going for those like allocated shares that are in the actual IPO.
Yep.
Just make sure you know how your broker functions with that, because now I know that if I ever do an IPO, basically I'm treating that like a 15-day lockup period where I'm, if I ever get shares allocated to myself in an IPO, I'm just going to be hodling for at least 15 days. And hopefully, yeah, I don't know. If you're scared about hodling for 15 days, then you probably shouldn't even be looking at it.
If you're a trader, do something else besides IPO.
Oh no, what you can do is you can no, never mind. I was gonna say like
Not
sell a partial like short or something like that.
Oh
Like,
no.
I don't know, do some type of hedge, like no. Oh man, yeah. So they've got, it looks like a 6-month lockup period.
Yep.
Which I would expect that after any IPO, usually you have a lot of employees that have options and investing in shares. And once that liquidity comes, a lot of those employees are going to use that liquidity to offload.
Yeah.
So this would actually be something pretty important to look into, to see if it's the entire company or just certain director level up type of employees. So let's see, the I don't know, like the valuation just kind of like boggles my mind, man. They have had, well, we'll give them this. Okay, so
Yeah.
royalty revenue, right? They've
Yep.
had really, really good revenue increase over a decent amount of time. So this charts from obviously 2010 to 2022. I kind of try to take the 2 points of like 2020 or 2012 to 2022 and see what this would like work out to. I mean, I don't know if they have actually detailed numbers. I just took 400 to like 1600, and it came out to basically a CAGR of about 15%. So it looks like their royalty revenue is it's growing around 15%, and surprisingly, it seems like their older products like remain stable for a pretty long period of time. So this could, I mean, I wouldn't be shocked if they kept up some type of like 15% CAGR on it or something like that. But yeah, now that's oh, what is going on out there? What is that? Oh, something outside. But anyway, so when I was looking this, I was like, okay, well, they have like insanely good gross margins. They've got decent I think their net margins are about 20%.
Yeah, it's respectable.
And
Seemed respectable at least.
I was trying to figure out, like, even if they keep up like 15-20% top line growth, which I think is like really doable, what would they be able to do as far as bottom line growth? Because I think they would be able to get some type of margin expansion potentially going forward, just with how, and that's really going to depend. I wish we had like 10 years of data for them, man, because like we could see the trends in their R&D spend, right? By far their biggest spend is R&D. I think R&D comes out to about like 50% of their revenue. If I could find my stupid little chart in this 200-page document, then we could go over that. But yeah, it's R&D, I want to say, is about 48 to 50% of their spend, or in regards to revenue. And then SG&A, I think, was like, there we go. SG&A is about 28%, and R&D was 42% was R&D. SG&A was 28%. So, but with that being said, if they can control their R&D and their SG&A, and those kind of flatline in correlation to their revenue increasing, they could have some pretty good expanding bottom line margins going forward. And I guess like I'm not trying to build like a bullish case for them, but I'm like trying to see like, okay, what's like the possibility, like a reasonable possibility of that happening. So, maybe if they're able to hit like 20% top line growth with some margin expansion, they can get their bottom line growth up to 25, 30%, something like that.
Yeah.
Over the next 5 years. But I do think like I feel like the market's gonna assign a pretty disgusting premium to this thing. I think it's going to be like trading at 40, 50p at least. Like maybe we'll do an Nvidia and trade at like,
massive
something
premium.
insane. Yeah. I don't know, man. But yeah, I don't know. What do you think about like their future prospects? Do you think they do you think they'll be able to keep it up? Do you think it'll accelerate?
Honestly, I have no clue. Just because, like, is this an invite for me to talk about risks and be a bit of a pessimist and spread FUD? I don't know if people still use that word or not, or acronym. Yeah, FUD.
FUD is fun.
Or should I hold off? Because
I don't know. You can spread some FUD. I don't really care. I mean,
okay, all right.
I will say this. In general, in
Yeah.
their industry, I see a lot of potential tailwinds
Yes.
with where compute is really heading,
Yes.
and a lot of shift over to ARM architecture
Yes.
to potentially accelerate their growth going forward. I don't know. I have a hard time seeing it being a huge acceleration from like 15% CAGR over the last 10 years. I don't see it accelerating to like 40% top line or something like that, right? Maybe it accelerates 20% top line. You get some margin expansion on the bottom line, and they're able to grow like the bottom line at like 25, 30%, maybe.
Yeah.
But even that I think would be kind of a stretch. And there's also some nuances in their royalty structure as far as and you can probably go. You want to go into this risk?
Yeah, why not? Why not?
Yeah, go for it.
All right. So if you like, well, I'll reference some. Bloomberg, Bloomberg's YouTube was like, hey, ARM IPO. We're uncertain about ARM China and how that will play. So there you go. There's a proper source of risk. But we're here to give more. Darn it, Jesse, we're here to give more to the people.
More.
Yeah, because yes, if you read through this F1, ARM China is not what you're getting with this IPO. That is a separate entity. It could be a legitimate risk. It is what it is. But based off of our own digging and thanks to an incredibly intelligent person who knows this, who's helped us out with the prep. If we reference page 44 on this, there's a lawsuit between ARM and Qualcomm. Qualcomm Nuvia specifically. So the nature of this lawsuit is Qualcomm before was chill and happy, spending a percentage for ARM chips that they would produce. Simple as. But then Qualcomm decides to get cute, buys a company called Nuvia, which has its own separate lower cost structure for ARM licensing and their own agreements there. And since Qualcomm has Nuvia, they're like, oh, we could cancel all of our orders and say they're all Nuvia's orders and get a lower price. And obviously ARM has reason to say, no, you can't do this. We're going to lawyer up. And Qualcomm says, no, we're going to lawyer up and sue you. So litigation risk is always fun.
What would Qualcomm even be suing for?
I don't know.
Like,
I forget.
We're gonna sue you because we don't want to pay you. Like,
we're talking about two very, very interesting and colorful companies.
Oh man.
Crazier things have happened in the legal system. But yeah. So that's one concrete risk that's clearly laid out. Another one is, and you've mentioned this before. SoftBank could possibly unload shares and really mess with things. But here's the other one: is since everyone knows that ARM architecture is really important, there's potential where the bigger boys could start gobbling up shares. And as a shareholder, it could be good, it could be bad, it could be just a matter of timing. Where all of a sudden they have this significant position, and then they start bullying and dictating around their own terms of their own deals with ARM, thereby giving them the parent company themselves, be it, I don't know, like an AMD or maybe or an Nvidia or whoever, put in company name, uh, and that company's performance does well, but you as an ARM shareholder, maybe you don't get to see that. Um, that's something that people should be aware of on the horizon. Another thing is the nature of this business. Since we are talking about chip design, no, I didn't. I don't have that. Anyways, since we are talking about the nature of chip design, there's a lot of powerful forward momentum. And we may be done with a certain virus, but the consequences during that time frame may not be done with ARM. It seems like they may have laid off significant people in chip design, and if you lay off the wrong few people in chip design, you may be screwed in the longer term sense, where it may take roughly 3-ish on the soonest side to 5-ish years for it to show up in the numbers. In the product quality, and that's another potential liability of. It seems like a lot of these deals, if the chip is is if ARM is to be held liable, then that's a lot of big players and big like large amounts of assets that they're counterparty to. Um, Again, it seems like most companies, like say a parts manufacturer for a car company, probably has that same liability, but it is something to be cognizant of. Um, and I want to say that covers. Oh, no. SoftBank is still very much in this picture. Look up SoftBank. Look up Masayoshi Son. Yeah. I'm not going to deprive people of their own research because it is colorful, to say the least.
Yeah, so Qualcomm, it looks like is about 11% of their total revenue.
Oh, yeah, that's
So
significant enough.
it's a pretty big chunk, it's over 10%. Um,
Yeah.
yeah, I don't know, like, I think, like, regarding the, um, like, counterparty risk, it's gonna be, I don't know. I don't
It probably
I'm not
probably
sure
not
if
going to
that's gonna
manifest right
be
away, but
I feel like it's gonna be kind of a red herring, because if
yeah,
they're just supplying, it depends on if they're providing a overall solution, or if they're just providing the right to use the architectural framework.
yeah,
Um, but even then, yeah, there's a little bit of risk there.
yep.
Um, yeah, I don't know. That'd
Yeah.
be it'd be interesting, but that's kind of above my head.
Oh, all this, just about all this is above my head. I'm just banging
I
rocks
will
here.
say, like, so the thing that I think is interesting to me and that I like the concept of, I don't know, I might not have the right
Mhm.
like mindset around this concept, but I do like the concept of, like, not having to bet on any chip player,
Yeah,
but just betting on the underlying framework and architecture that is accepted across the industry.
yep.
So it doesn't really matter which chip player, like, wins.
Mhm.
It's like, as long as all of them are using the quote unquote best architecture, which is ARM, like, ARM's just going to be collecting that money.
Yep.
So we could say it is a toll road of AI. Just kidding.
It
The
is the
toll
picks and
road.
shovels of server and data
Oh
storage.
man.
Oh, actually, speaking of, shout out to Risk Five, another type of chip that may possibly do something, but eh,
Yeah.
yeah, it is what it is.
D-
I'm not that competent.
Dan, I definitely did not do that.
Oh
So
no. Uh,
not no.
there
um,
is one business risk though, that I think people should be aware of, and you already highlighted it with R&D costs. Testing for future designs, there's high probability that these costs will end up being exponential, because it seems like the trend has been that customers want bigger chips, be it more core or just surface area, perhaps just bigger.
Bigger is better.
Yeah, yeah. So as the chips get bigger, as more and more is done, more and more testing has to get done, and that has no choice but to raise the costs. And it may seem to, in this case, be manifested in R&D. The last few years, if we trust pro forma, doesn't seem to indicate that right now, but it is something to be careful of and to monitor if anyone is getting in this. Speaking of pro forma, by the way, shout out to Cliff Asness. He wrote a paper on the perils of pro forma. Still have yet to read it, but pro forma tends to make me want to cry when it comes to counting.
Huh. You should send that to me.
Yeah, it's
Whenever I want
pro
a boring
forma
read, I
is
will go through it.
difficult. Pro forma is difficult for me.
And okay, so the other, since we're getting under risks, right?
Yeah. Yep.
Something that I will like harp on pretty hard is that, okay, so imagine you're a company and you've built this
Mhm.
company and you're wanting to go to the public markets and IPO, and that's your goal, right? Like naturally, what are you gonna do to achieve that goal? I'll ask you this, Bacon. Bacon, what would you do? You have a company and you want to IPO in like 4 years or 5 years.
Yeah.
Like, what are you gonna do?
Oh,
Like,
well, let me tell you. I am going to do whatever possible. Like, I will be very, very cleaned up. Like this hair, like I have my own appointment that's like coming up in a couple days. I would have like this would have been taken care of a long time ago. I would be far more buttoned up. I would, oh yeah,
so
yeah. Best foot
with
forward.
okay, that's good because so with that, my expectation is that when a company comes to IPO, they are probably in some of the best condition that they can possibly be in
Yep.
to IPO. Meaning they have probably worked the last couple of years on cleaning up their financials to look really good, cleaning up, maybe like cutting costs, maybe doing things here and there, just be like, oh yeah, our margins are our net margins are now like 20% or now they're 24%, and just kind of skimping down, and they're trying to present their best self, right? So and with that, with that, I think it would not surprise me at all if some of the cuts or the efficiencies that were gained in order to IPO or look good for the IPO,
Yep.
if that spending spigot just like came on after the IPO,
Yeah.
or within the first 18 months after the IPO, and they open up that spending pretty heavily, and maybe where they cut back previously, they go kind of normalize and they ramp spending up really hard, and that could be in R&D, could be in SG&A. We've only got a couple of years of data to go off here, so
Yep.
it's like, how much do you really know? Like, what were they doing over the last 8-10 years? We don't really know. At least if anybody has that information, get it to me, because that would be interesting. Because really all we have right now is like 2 or 3 years data. So yeah, I would not be surprised at all if they get this IPO done, they get the capital,
Yep.
right? They get on the markets, and they're only like 8% listed, right? Essentially 8% of the float's
Yeah.
going to be
Yeah.
traded. um I would not be surprised if they um if we saw some liquidation from insiders after the 180 days, and then they kind of really ramped up spending, because they were neglecting spending in certain areas because they were trying to present themselves as a very nice looking company. So that's risk that I see, and I think that could be not only just for ARM, but for pretty much any company that's pursuing an IPO or a uplist or additional capital. They might be making short-term adjustments that aren't realistic long-term, just to make them look better, in the short term. So, oh man, But yeah. So do we want to get into the valuation?
Yes. Yes.
You want to
Give
do
the
it?
people what they want, and they want
Oh
models.
man.
Maybe,
I
yeah, yeah.
yeah.
Spreadsheet
Yeah.
models. Yeah,
I
what type of
I
sicko do you
think
think?
I think man, I think the market is gonna trade this really rich. I don't see
Yeah.
how it doesn't. Just because I think it deservedly like does deserve a certain amount of premium, I would say, in the space
Mhm.
that it's in. If you have a company that's getting, mostly just royalty and IP
Licensing.
revenue,
Oh,
and their
yeah, yeah.
gross margins are 95%, 96%, that's pretty nice. The market's probably going to
Mhm.
assign a premium to that. So, um, basically, this is not Microsoft. Don't worry, guys. Yeah, don't worry about that. But basically, I just I don't have a manual template yet. I need to create one. I will create one eventually, but I basically adjusted this just to basically start off at about 575 million after 1 year
Yeah.
in net income. So we're doing net income based, and I did the manual adjustments here just to normalize everything to that starting base of 511,
Mhm.
and go off of there. Now, man, uh, I think realistically, I could see them doing like 20%. Um, but I feel like it would be more likely that they might do 20% over or 20% average KGAR on the bottom line, um, over 5 years with some type of short term flux, um, after the IPO. So maybe we see like a year of kind of crap.
Mhm.
Maybe not. I
Maybe,
don't
maybe
know.
not. Yeah.
I will say the thing that's interesting, like Nvidia tried to buy them out already for 40 billion, right?
Yeah.
And
I
then
believe so, yeah.
and they stopped that, or they stopped pursuing that acquisition
Mhm.
because regulatory issues were just too strong to deal with.
Yeah.
And Nvidia, I think that was in 2019 or 2020 when they had that agreement. It might have been 2019 when they announced the agreement, and then 2020 when they broke it off. But you have these large tech players that are really relying on their architecture and
Yeah.
paying this company decent amount of money, and you have like interest from that investor base. So that it makes me think that some of these companies are probably more entrenched, more reliant on ARM architecture,
Mhm.
than I would maybe initially suspect, right?
Yeah.
um but yeah, man, it's just expensive. Like, it's just bad. um like so here we got we're not assuming any dilution,
Yeah.
which is
Simplifying it.
already that's
Yeah.
already like giving them the more than the benefit of the doubt. I would probably run this at 5% dilution with like a 20% spread if I was really gonna we could put that in there, and I think that'd be like more realistic. Or I don't know, maybe uh we do like a 1.5% dilution with like a positive 15. um yeah, that'd be like somewhat realistic. So because I think they are going to dilute for a while, with how much they're making in relation to like what they would be IPOing at or trading at. Like I would
Mhm.
not want them buying back shares, that's for sure. Like hell no. Don't do that. Because they're essentially like, I mean, if they're at a $50 billion market cap and their net income is what, 500 million, they're at like
Mhm.
a 1% net yield. 1%, like put that money in a treasury, like I mean, like don't buy back, that's for sure. Like keep it in cash, like keep it in cash and short-term investments, and then probably just load into um I would almost say like R&D and trying to grow the company quicker, right?
Yeah.
um there's no point in doing any type of buyback, in my opinion, at that type of evaluation. Like, no reason, right? And remember, they're IPOing at $47 to $50 a share for a reason, right?
Yes.
they want that money. So, so
Money, 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 money.
you can basically look at this as them like trying to offload and
Yep.
raise capital.
Yeah.
So yeah, God, man, like around on like so so the bottom line growth we got from about 12.66% up to 40%. It's a huge range.
Yep.
But I think it's a pretty realistic range. Dilution we've got from 2.62% in the scenario 1 to 1.5% in scenario 5. I think that's also realistic, but you could easily justify saying like there's going to be like a higher rate of dilution than this, I think.
Yeah.
But at the same time, they don't necessarily have to dilute, right? So they're
Mhm.
profitable, so maybe not. Like
Yeah.
that's the good thing. So maybe they don't dilute. I don't know. So on the multiples front, we've got oh my gosh, 2% in the best case scenario to 3.28% in the worst case scenario after the 5-year period, and that's so 2% would basically be like a PE of 50, right?
Yeah.
And honestly, if they were growing bottom line at 40%, a PE of 50 probably wouldn't be that insane, right? That's like a little bit over 1 peg ratio. And then what, 3.28? I need to do the calculation on this. What is it? 3.28. I think that is around like a
Uh-oh. Uh-oh. Panic. Everyone panic. I think we might have lost you,
like
Jesse.
35 PE, something like that. My screen. Am I there?
Okay. Yeah, you're back. I was gonna say I would have
Hello?
had to like awkwardly monologue.
Am I back?
Yeah, you're back. Yeah, you're back. I think.
Okay. I opened my calculator and it was like, nope.
Oh, yeah. I was gonna have to like awkwardly
Man,
like
I'm
do the
back.
disclaimer
I'm
for
gone
you.
again, dude. My wireless connectivity is bad. So yeah, 3.28 would be like a P of like 30. Which would be pretty dang high for if they're only growing the bottom line at like 12.66.
Yeah.
I mean, okay, so maybe 20% is too high. Like maybe 20% target CAGR is too high. Maybe we do like a 17.5. That might be a little bit more realistic. You could probably argue for that since their revenue should be fairly like stable,
Arguments can be
right?
made.
It's
Yeah.
high
Yeah.
margin. It should be
Mhm.
stable.
Mhm.
Even if they have a dive off or like a fall off, like it's they most likely wouldn't go into unprofitability, right? So
Yeah.
hopefully, knock on wood.
Theoretically, it
Who
should be.
knows?
Yeah. Yeah.
Unless they ramp up their spending and they're like, let's go. Like like it could happen. It could happen.
SGNA becomes TNA.
Yeah. Shit. Oh my gosh. They rented out the party bus for
Oh, dude.
the holiday party.
M&A
Bringing it
talks with
in.
Rick. If you know, you know.
Yeah. Oh my gosh. I wasn't going there, man. Uh but I mean, so in the base case scenario, they'd have a net income of about 1.4 billion after 5 years.
Yeah.
The bullish or the highest case would be about 2.7 billion. That's a 40% growth rate. The lowest case is like about 1 billion, 927 million. So like honestly, man, it's hard. Like it's all over the place. I think like around $20 a share gets me interested, I think. Um, I don't know. If I was gonna do anything, like if I wanted to own this right now, it would be super speculative, and I'd probably
Yeah.
be looking for the door in the next 30 days. like it'd be like, oh, let's see if it pumps on the IPO, and then like
Oh yeah.
peace.
Yeah. Oh, because we don't like the we both agree we don't like the valuation, but the business model seems solid. Yeah, I know I've been getting trolled in the comments.
Bacon.
Live comments have
Let's go
been going nuts.
bacon.
All I can say is I'm very happily single. So, you all are trolling. Anyways, yeah, like business model very solid. And it's Like at least it seems like it is, and there are at least signs that telltale signs to be careful and cautious of. Um, and it'll be incredibly interesting. Like I like this IPO and like from a learning perspective. I know that's probably like going to be a slogan of mine at some point, and I'll get memed by it. But yeah, like we may not agree with valuation, but mechanically, we could definitely see this thing going crazy, good and bad,
Oh,
whether you're
dude,
long
I
or
could see
short.
it. Man, see that's the thing. Like I'm like I could see it getting hyped up and going on some crazy,
Yeah,
IPO run.
yeah.
I could also
Hmm.
see this thing like going down to like $20 in like 3 months.
Yeah,
Like,
not hunks.
like I could see this one where like you look back in 2 years and the charts just like from IPOs just like
Yeah.
um because it's I don't know, like we don't have a lot to judge management on as far as like, okay, like do they actually care about the shareholders? Are they
Yeah.
actually going to be able to like allocate capital correctly? Are they going to look for ways to like
Mhm.
grow the revenue quickly and like I don't know, like in uh an efficient way? But like I don't know, it's really hard to judge a company that's going IPO that's just kind of been in their own box for a while. um you don't really have any, it's not like you can go for back for 5 years and listen to management calls. um yeah,
Yeah,
but I don't know, man. It's intriguing, I will
it is.
say. Like I'm very interested in it.
It is.
Very interested in it.
Yep.
uh
I
I just I would feel much more comfortable if they had already been public for like 2.5 or 3 years,
Oh,
and
yeah,
I
yeah.
was able to like get a much better feel for like not only what management has said in the past, but what they actually did in the past, to see if
Mhm.
that lines up and if I agree with it. So
Yeah.
yeah, man.
Because like I have my own like IPO-ish stories like that are pretty recent too. Like a company by the name of Portillo's. If you know, you know. As far as like being in the greater Chicagoland area, good food. Um, yeah. Bad performance since IPO last I checked. GE Healthcare was one that ran away from me, and I know that's more of a spin-off, but so these things can legitimately go, multiple ways for sure.
Yeah,
Um,
I will say fundamentally, like I'm like,
yeah,
oh, this doesn't seem like SPAC bad.
no, no,
Like,
no,
you know what I
no,
mean?
no,
like,
no.
like I've seen a lot worse, but
Yes, this is
but
true.
this
Like,
isn't. Yeah, this isn't one where I'm like, oh yeah, this looks like super interesting off of the IPO price. Like,
yeah,
whew, it
yeah,
is spendy.
oh yeah.
But man, it's gonna be so. I think what's the offer date? Uh, I think the offer date or like I can't remember what it's called, but it's already in offer. Um, the date that it like gets allocated, I think, where the shares actually get allocated or they finalize that, I
Mhm.
want to say is the 13th.
Alrighty,
So I think it's like what, a week or two, and then the shares will probably be allocated, assuming the IPO goes through,
yeah,
and then it'll probably be trading a little bit after that. I'm guessing maybe a couple days after that, a day or
yeah,
so, or a couple days. It's gonna be really interesting to see what happens because
oh yeah,
I'm like, are we back in the clown market? That's what I'm wondering, right? Like, does this thing get that Nvidia like sympathy move and just like, boo?
small car, but there's a lot of room. A lot of clowns can get in. Pile in.
Yeah.
No, 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 no.
And on top of that, only like 10% of it actually being traded, right?
Yeah,
So
yeah,
I think it's only going to be, well, 9 point or 95, like 5 billion or so,
mhm.
around 5 billion trading in float. So yeah, it'll be interesting. It'll be interesting, man.
It's
Do you have a
times.
do you have any thoughts on the overall market and people watching? If you got any questions or comments, hit us up and maybe we'll do some Q&A for a little bit.
Oh yeah, yeah. If not, they know how to find you. Hopefully, being your Discord.
Oh
Shout out
yeah.
to the Cold Investor
See,
Discord.
I I am absolutely horrible at plugging anything I do.
Yeah,
And that's why Bacon is
gotta
the
do
resident
it.
co-host because I'm like, "All right, guys, later." And he's like, "Wait, guys, if you're not part of the Discord, like check it out in the description below."
Well,
And I
I mean,
thank
like
him for
you
it.
offer it for free, so like,
I know,
like
yeah.
at least consider or go nuts, and
Yeah.
like
If
you're out nothing but time.
if you're not part of the Discord, check it out. Description below.
Yeah,
I made some announcements on the Discord over the last week, so I'm going to be working on that stuff over the next like month or two.
yeah,
It is completely free, but I am putting a structure in place that is going to encourage people to participate in a high value way. So there's going to be a small section of the Discord that is either going to be um like what $5 a month
that's.
supporter
I was gonna
subscription,
say that's
or
what I
like
believe.
if
Yeah,
if you're doing write-ups and you're participating in the Discord and you're providing value, um there's a special tag that you'll most likely get, and then you'll get free access to that area of the Discord, and that area of the Discord will eventually have my valuation template on there, and I'll probably be getting hopefully discounts to the FMP API that I use for the integration into Google Sheets. So um, it's all in the works, but I'm hoping to have that done in the next like month or two. But you know
yeah,
how it can be when you're dealing with companies and trying to
yeah, yeah.
trying to
I
get
mean,
something set up that's
like.
beneficial for everybody involved is kind of hard.
Like
So
that's the thing with you though, is that not only do you like not plug, but you also like move very very subtly as far as like trying to give value prop to the people.
yeah,
So yeah, that's cool.
yeah. Well, so like it's kind of funny because I've had a lot of people come into the Discord and been like, "Oh, can I get your valuation template from a
Hmm.
video I made a while ago?" And I was gonna give it out for free. I did for a little bit, and then I scaled back for certain reasons. Um, and that's cool. Like if they want to come in and get the valuation template, they can do that.
Yeah,
If they want to sign up for it. But honestly, I I don't have any issues giving it out to people that are like participating and providing value within the community. But if you're just gonna like come in and be like, oh, I just want like access to your stuff, like come on, like I don't know, I don't know.
I mean, like
Um,
it's not much of a paywall if it's $5 a month. Like in all
I know.
honesty, yeah,
That's the other thing.
yeah,
Like,
yeah, and it's
and hopefully the
yeah,
savings that I get for the community discounts to FMP is going to be
mhm,
more than $5. So it's going to be like a wash.
fingers crossed.
Um, yeah. So yeah, fingers knock on
Yeah,
wood, fingers
yeah,
crossed.
yeah,
We'll see how that goes. But yeah, Jake, I think yeah, valuation is insane. Especially at the IPO price, valuation is really insane. What the
yeah.
heck was
But
that? Um,
it's
at like my scenarios, yeah, I mean like yeah, honestly 14 to 21 bucks I would feel really good about, honestly. Like I'd be like, yeah, I know what I'm getting. It's still pricey, like that's still pricey, but given the structure of the business that I'm buying, as long as I am in agreement with, how management has um, allocated capital and what they've done in the past, then like I feel pretty good about that, like, $14 to $20 area, $21 area.
yeah,
And it, the fun thing about this one is going to be that my mind's probably going to change pretty frequently as they have their first couple quarterly results and
yeah,
whatnot. So um and either the market's going to be loving them or hating them.
yeah. This is definitely a tough, like semis especially, really really tough market to get a command or even like an understanding of. Like, got so many moving parts. Designers, well, okay, designers, cool. What type of design are we talking about? What types of chips?
Yeah.
Yeah, manufacturing,
Yeah.
cool. What type of chip are you manufacturing? What are your end
Well,
consumers?
so and Yeah, Jake, do it. Join, drop the
Yeah, I was gonna
knowledge
say,
bombs. I'll give
yeah,
you the tag. Come on, man.
Fuhat is in there. Yeah.
Fuhat is in there, and
Yep.
Fuhat has behaved, and Fuhat knows that I ain't gonna take nothing. So, like,
Oh no, I feel like you challenged.
I have a very short fuse. So I love you, Fuhat, but man, like, oh man. But okay, so getting on to I don't know, we sidetracked a little bit, but
Yeah.
Nvidia,
Yes.
like one of the things that really concerns me about Nvidia is that I still strongly hold the belief that eventually, given enough time, a lot of these companies that are purchasing Nvidia chips for AI
Mhm.
are eventually going to be doing their own in-house designs um, that are really curated to their specific function of whatever they're using it for. Um, that and just that like kind of thesis or thought process alone really keeps me hesitant on Nvidia. However, that's the type of situation where, if you own ARM, you don't really care
Yeah.
because they're going to be working most likely off of the ARM architecture,
Yeah.
right? So,
Yep.
like the Google chipsets that have been, all the rage lately. So,
Mhm.
um, yeah,
Yeah.
I man, Nvidia is insane. I it's man, I don't know. It's crazy. And the market's like it's like the market thinks that this can just happen forever. And I'm like, like it's gonna
You
be
know that
it's
one's
gonna
getting
be
clipped. You know that our resident clip
yeah.
snippers. Yeah.
It's gonna be gnarly, man, because okay, like the entire like a lot of different companies are going through this initial capex surge
Hmm.
for this AI infrastructure. And once that initial like surge and build out completes, like it's gonna oh man, their spending is gonna pull back, I think, really, really hard. I don't know when it's gonna be. And for people that are looking at Nvidia of like when would the Nvidia pullback be, as far as like the capex pullback from these companies, I would keep a really close eye on ANET, Arista Networks,
Oh yeah.
because
Yep.
Arista Networks is most likely going to feel the impact of that capex pullback in the data center realm before NVIDIA does. So ANET could be a leading indicator of what's to come for NVIDIA.
Mhm.
Um, don't I'm not guaranteeing it. I'm just saying like it's possible that ANET gives us a little bit of um, heads up as far as when the infrastructure build out is starting to wind down and this potential capex surge could wind down. So,
Oh well, we got some movement here. Got a question for Airbnb, and it seems like Fabio either is trolling or has something legitimate.
noise. I clicked the
Noise.
wrong one.
Yeah,
Fabio, man,
Fabio.
don't leave us hanging, man.
Yeah, I was gonna say.
Got share your secrets. Are you SoftBank?
He's
It's
gone
like,
from
guys,
he's gone
I
from.
need to offload all my shares on this community.
I swear the capital mindset lore must be like extensive on Fabio's job history alone. Janitors unite. If you know, you know. Oh, he's still
Dex,
doing research.
are Dex, are you Paul? What are you trying to do, man?
Oh no.
Like,
Oh no. Oh, we have been cucked by Fabio. That's very sad.
man,
But in the
such a
meantime, though,
tease.
we do have something concrete from Moxie asking about Airbnb. I think there were like a couple of other tickers farther up, but I don't know if we got the time or if you
Let's
got
pull
the
that
time.
up.
Airbnb. I don't know why. I've been busy with school and work today, so I haven't been able to look into the markets. Do you happen to know by chance or no?
Regarding Airbnb,
Yeah.
no idea. Well,
Okay.
I mean, is
Like
it a different comment or is it just this one? So it looks like
just that one.
I had to move up right because of the S&P 500 inclusion.
Yeah.
I, you know, I I'm always like impartial on when anything is added to any sort of index, whether that be like a small cap, mid cap, or large cap
Mhm.
index, or S&P 500, because like they're always, especially when you're right on the line, they're always going to be kind of like moving in and out of like mid cap to large cap, S&P 500, mid cap, like
Yeah.
whatever.
Yeah.
And it doesn't really mean that anything structurally changed about the company. All it means is that, you know, the market as a whole has bid it up and it has the requirements to meet the S&P 500. Now, this could have been like slowly taking place over a long period of time, right?
Mhm.
And then it meets the requirements and the business perform well and it gets included in the S&P 500. But I would not let an inclusion or even an exclusion
Mhm.
dictate whether I was going to buy, sell, or hold. Right?
Yeah.
That's not about the thesis of the individual company.
Yeah.
Because even if it's excluded, it could have just been at the bottom of the S&P 500,
Mhm.
and another company is just killing it,
Yeah.
right? And it gets replaced because another company is just ridiculously outperforming.
Mhm.
So I don't know. Like, I think it just all comes back to the company and the fundamentals. Yeah, I would, I personally usually, I'm not, I don't let like an inclusion or exclusion um, carry much weight on whether I buy, sell, or hold.
Yeah. I would be cautious to give any sort of advice. What I like to recommend people though is I defer to smarter people. And one smart old guy has said invert, always invert. So it's very easy for us to think, oh, what's the upside to all this? Well, let's flip it. What's the downside to all this?
Yeah,
And how do we manage our downside? And if you're comfortable with things, and are okay with things going against you again, maybe that's okay. If you're not, then maybe you should take some off the table. Maybe you should get out completely. I don't know. I don't know all the details. I am not comfortable with anything, but like there
none
are
of this is
different tools.
financial
Yeah,
advice. We are
yeah,
not financial advisors.
yeah. There's a disclaimer. There's a
Disclosure,
disclaimer.
disclosure, disclosure.
I am
um,
just the guy. I am just the guy who recommends just be careful out there.
no, but like, so if I was in the position and one of the companies that I say I love this company and it's
Mhm.
performing really good and it gets added to the S&P 500, and because of that news, it's getting hyped up a little bit and it bumps up in price. Like, I don't think I would necessarily want to sell it, right? Like, if my company's performing really really well,
Yeah,
I don't know if I would want to necessarily sell just on something like that.
yeah,
um unless it was like getting to the point where I thought the valuation was like super, 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 super stretched and like you couldn't even really justify it.
yeah,
But yeah, like, I mean, if you're doing things right, hopefully, the mid caps or the small caps that you do buy do perform well and grow and eventually jump into those higher higher indexes, right?
yeah,
Um, yeah.
yeah.
All right. Cool. Well, I'm gonna give it another minute. We got 1 minute.
Oh
Any more
snap!
questions?
Mad minute, mad minute.
Mad minute. Buy, buy, buy.
Oh
Sell,
dear God!
sell, sell.
There's always a bull market somewhere.
For nothing. Remember, if you want to make money in the market, just inverse Kramer.
Oh
That
dear
is
God!
not financial advice. That was a joke.
Yes.
Entertainment purposes only.
More chat. They're
Oh
getting sold
man.
by us. Is this the real value prop?
Value prop.
Yeah.
Lightning round. Lightning
Lightning.
round. Oh my
Can we
god.
discuss? Oh no, 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 not
Lightning
philosophy.
round. 5-year government treasuries. Buy or sell bacon. Can we discuss the meaning of life?
Oh
Oh
no.
Lord.
Oh no.
Well, we can do that for my 1,000 subscriber live stream.
Yep.
When I need to up my watch hours, we can discuss the meaning of life. Oh, talk about DG.
Entertain
Entertain
Fabio.
me.
Oh jeez.
Oh,
Are you in
what
DG?
do you mean, Fabio? Are you not entertained?
Yeah.
Like, Come on.
Yeah.
Ooh. I mean, okay, so let's go off of I don't know, you
Uh,
want to talk about retail for a little
I mean,
bit?
sure,
You
why
want to
not?
talk about
Sure, why not?
retail?
Sure, why not?
Okay,
Like
like
full. All right, full disclosure.
technically,
Yeah.
we haven't really been in any type of trash panda talk today, so
Yes.
we should probably talk about
Stay on
something
brand.
that's a little bit more trash panda. And what is more trash panda than going to a dollar store and getting expired ground beef?
Well.
So, with that being said,
Okay.
man, how do you feel about the Bacon? How do you feel about the retail sector in general right now?
Uh, it's getting interesting. Some more interesting than others. Full disclosure, I own a single share of Dollar General. But that's more
Ooh,
so
is
just
it worth a
because.
dollar?
No, no.
You should buy a dollar of
Yeah,
Dollar General.
yeah, have fractional shares. No, all right. So the reason why I do this is because watch lists tend to build up over time, especially if you really like nerding out. So a single share may seem like a meme, it may seem like a troll, but in this case, it's because I want to learn more. I get why people are definitely bearish on this. I think I grasp the framework of the bullish take on this. I suspect that there's a good possibility that this thing will have a wide window of buying opportunity if you think that it is an okay intermediate to longer term hold. Um, but yeah, yeah, I don't have all that much like profound stuff to do that. Oh dear God, Fabio,
What?
Fabio, you troll. Actually, you know what? You know what? Screw
Can
this.
you
I'm
buy
overriding.
bacon?
I'm overriding all of you. I've held it. I've held it in for this long. I want to complain about Crocs. I've been on both your guys' discords and
Well,
we've
you
talked
gotta let
about
me talk
Crocs.
about Dollar General.
Oh yeah, yeah. Okay. All right. I was just gonna
I
baby
mean,
rage.
dude, no, no, you're gonna complain about Crocs, and then it's not gonna go down, and you're gonna be the issue. Okay, you talk about it too much. Okay, come on, come on.
Can't
We
win.
gotta talk
Can't
about
win.
Dollar General, so we
Yeah.
pump Fabio's bags right now, right? Uh,
I don't even know what his cost basis is. I'm such a bad fan.
no, fuck, no, back to Dollar General. Okay, but I mean, Dollar General versus Crocs. Honestly, man, I'm
Oh,
kind of digging
that's no
Crocs a bit
competition.
more.
Yeah,
Like, I don't
like
know.
not
So
apples to
I think
oranges, but yeah.
so. Oh man, so I mean, Dollar General is just like a play on the consumer. That's just basically it right now. Like, um, they have been absolutely crushed. Shrink has been pretty bad for them.
Yeah.
Inventory bloat, they need to get that under control. But you had the decreasing of the SNAP benefits. You have the lower end consumer getting hit harder than like upper end consumer right now. Um, so their margins are tightening, yet they're still kind of uh, allocating more capital to development and wages and expansion. I think they pulled back their expansion plans a little bit, but they're still like kind of like they're not cutting back too much on that.
No.
Um, I'm bummed that they're like not doing share buybacks now. Like that sucks.
Oh,
Like, come on.
I think, and this kind of like plays into the bullish framework. Not an argument, not a thesis. Framework. Is we can expect this quarter, like the most recent quarter they reported, and the upcoming quarter, where capex is going to be elevated. But in theory, assuming the management is kind of true to their words, it should be reduced as time goes forward.
I
So
don't. So
maybe, but
I think it's a solid business, right? I
yeah,
really like the business.
yeah,
I think it's solid management. I don't like people or I know some people like don't like the management, like, okay, like whatever.
mm,
It's hard to argue with what they've done over the last like 10, 15 years. But my criticism is going to be just because they did good in a certain economic environment, like macro environment, doesn't mean that they're going to be doing good in a different macro environment, right?
mhm.
Um, I man, I could see this one getting really, really, really crushed.
Yeah.
And then like that consumer comes back and
Hmm.
strengthens up a bit, and it just flips a switch, man.
Yep. This.
Especially with these companies that like if you're going but from the thesis that this is going to be somewhat of a cyclical pullback in the consumer spend for their target customer, which I think what's their like target customer household income is like what 36K, or is it 46? It's
It's
like
really low. It's
it's
really
it's
low because it's
pretty
rural.
dang low, right?
Yeah. Yeah.
So things that could, help them along, obviously, or if something happens and SNAP benefits increase, that'll be
Hmm.
great for Dollar General. Um, I I don't know. I'm on the fence of like I think they are making probably the right decision to continue investment, and specifically continue investment in expanding in some of their ideal areas that they're targeting right now, but also in technology and changes that might help reduce shrink. Um, but dude, I think like this one's getting like trash pandy, man. Like
Yeah.
just the sentiment around it is
Yeah.
so bad.
Yep.
Is so bad.
That's why it's a single share
Um,
for me.
it's so
Yeah.
bad.
Could go down
Like,
90%. Will I
yeah.
cry? Not really, because it's a single
I mean,
share.
they're like what is it? So their EBIT yields on an LTM basis is like 10% right now. So
Yep.
like operating cash flow 6.3%. Like, so just looking at their historical like 5-year average multiples versus what they're trading at now right now, they're looking pretty cheap, other than a free cash flow basis, but their
Hmm.
free cash flow is being largely absorbed by CapEx, if I
Yeah.
remember correctly.
Yeah.
So like, oh man. But like, okay, so we're seeing this with Dollar General.
Yep.
Target is kind of seeing the
Yep.
same thing. Um, Alta seeing the same thing.
Yep.
Uh, Dick's seeing the same
Hmm.
thing. Um,
Five Below.
ASO is
ASO,
seeing the
I
same
thought.
thing.
Really, I thought they were doing okay. But then
So
again,
no, so ASO, from how I interpreted everything,
uh huh.
um, their margins are good because they're really, really, really they're doing a lot better on shrink, but their top line
Oh.
kind of missed,
Oh.
right?
Okay.
So
All right. All right.
so
No,
so
that's
they're
fair.
still
That's fair.
seeing the
Yeah.
hit,
Yeah.
but you give grandma a gun in the store and it's fine. Yeah, like
Second Amendment. Yay.
different type of shrinkage.
Oh
Uh,
dear God.
so
The real value is
so
right here.
ASO did really good as far as their
Yeah.
shrink control
Yeah.
and their theft control, and that's kind of been their highlight. Now the thing where I like am more bullish on something like Crocs than retail right now is that like Crocs isn't really going to be affected by shrinkage as much. Like people that are
Yeah.
going to buy Crocs, are a lot of them are buying them like DTC, and there's not really that opportunity for it. There's a little bit because they do have some their own like Crocs branded stores, but even
Yeah.
if the retailers themselves that like sell Crocs, like ASO, Dick's, whoever, even if those retailers get hosed, then like that cost isn't really like
Yeah.
passed
Yeah.
on to Crocs, right?
No.
It's just like the retailer takes the hit.
Hmm.
Um, Now, what you'd have to be worried about is the consumer weakening enough to where um, Crocs' consumer basically says, "Oh, I'm going to go buy a knockoff over Crocs."
Yeah.
I don't think that's going to happen. Personally, I don't think that's going to happen. I think like if people are going to want to buy Crocs, they're going to buy Crocs,
Yeah.
and they're not going to buy Doggy Woggies or whatever it is.
Yep.
But oh man.
Yep.
Yes, and as Moxie says, hit the like and subscribe if you haven't already. I would
Yep.
appreciate it. Um, but yeah, retail is one of those sectors, man. I like I was really liking REITs for a while, right? Office REITs, and some other types of REITs, and I was accumulating those, and now I'm like, okay, how bad is real retail gonna get? Like,
You
how bad is it
contrarian.
gonna get? And but retail, it could be a little bit, I think, a little bit bumpier as far as
Hmm.
um the pullback in their bottom line income over the
Yeah.
next couple quarters. So
Yeah.
But yeah, I'm excited to see what happens, man. It's gonna it's kind of it's trying to find the ones that are gonna, potentially I don't know, maybe not even do the best during the pullback, but they're gonna invest in the right areas to where when their consumer does recover,
Yeah.
that that normalization could be just wicked.
Yep.
So
That
all
being
right.
said, Five Below is a weird company. I listened to their earnings at least like halfway through the Q&A, and it's
Five
just
Below
weird.
is the other dollar company, right?
Dollar-ish. Yeah, like
Dollar-ish. Yeah.
they're
So
more
there's Dollar Tree because
Mhm.
I kind of checked out Dollar Tree, Dollar General,
Yeah.
and was there another one? Can't remember.
I want to say Family, but Family Dollar's under
Family
Dollar
Dollar.
Tree
No,
though.
but Family Dollar got bought out by Dollar Tree,
Yeah,
right?
yeah. I would sort of want
Yeah.
to say.
Yeah.
But yeah,
Because
yeah. Yep.
yeah, I think Dollar General was going to bid for Family Dollar, but it would have been the I think it was like going to be the number 1 player taking up the number 3 player.
Yeah, yeah.
So like I think they actually did bid for Family Dollar.
Mhm.
Family Dollar didn't even consider it
Mhm.
and went with Dollar Tree because Family Dollar thought the regulatory issues were going to be
Yeah.
too hard
Yeah.
going to the top player,
Yeah.
which like good on them. They actually
Mhm.
I think they accepted a lower offer
Yep.
than Dollar General gave them because of
Yep.
that. So, but
Uh-huh.
anyway, so it's
Yeah.
5
Five
what is it?
Below.
5
Uh,
below? Is that
yeah, yeah. It's a weird one just because like if you have a bias that's really anti-debt, consider Five Below. I'm not saying it's a buy right now because I have no freaking clue. But yeah, it's a really weird one. They're definitely like uh, hyped themselves up for this holiday season because their shoppers are more discretionary, it seems.
yeah.
But we'll see. Yeah, I've no idea. Oh no, Jake, no! Why would
Jake,
you reference?
Jake,
Uh,
I'm hoping that's a reference. I'm
it's
hoping
probably a
that's a
reference.
reference from a certain YouTube creator that just released a video today. Because if it is, it's hilarious. If it's not a reference and you're really saying you're going all in big tech, like uh,
Yeah,
nothing against big tech. I love big tech.
yeah.
I
I
love
mean,
big
sure.
tech at the right price,
I'm
though.
I'm I'm heavily indexed, so I've got a lot of big tech. um, but yeah, is what it is.
Yeah, yeah,
Yeah.
man. Meta continues to just pump, just
Oh yeah.
hanging in there, man. Actually,
Yeah.
I think the Qs did pretty well today
Oh, did
compared
they?
to the other indexes. Like Qs were holding pretty strong compared to
Hmm.
uh SPY and I think the small and mid caps. So pretty
Yeah.
interesting. But
Winner
all
take
right,
all.
I think that is it. We are at an hour and 13 minutes.
Yeah.
Thank you guys for coming. It was fun. Check out the Discord in the description below. Like and subscribe, and we will see you hopefully next week for another live stream. So
Yeah.
talk to you later.